The US dollar has come under pressure, gold has broken out, and there's plenty of uncertainty in the air. The global economy is contending with economic recoveries that are still looking quite fragile over a decade after the financial markets crisis of 2008. And this comes at a time when monetary policy and government stimulus tools have been exhausted, leaving very little room for meaningful intervention whenever that next negative shock affects investor sentiment. And investor sentiment is going to be a critical subject in the weeks and months ahead when considering the fact that U.S. equities are still trading just off record highs in the face of all of this. China's growth outlook, U.S. trade policy, Brexit, Eurozone setbacks are just some of the challenges we're contending with, and we continue to struggle with the idea that investors will keep shrugging off these risks on assurances that are no longer capable of offering what they once had the capacity to do. At a time when the Fed has moved more aggressively back into dovish mode and the U.S. administration is pushing its soft dollar trade policy, we wonder if that next wave of risk liquidation will inspire the same flight to safety bid into the U.S. dollar as we have grown to expect. It seems like the dollar has already enjoyed a very nice run, and a lot of that flight to safety could now be diverted to the other major currencies, which may very well outperform whether they like it or not. We know the BOJ, SNB, and ECB are all resistant to seeing their respective currencies appreciate, and this leaves only the pound as the single major currency that wouldn't be discouraged by the inflow. Of course, Brexit has been a thorn at the side of the pound and continues to be, though ultimately we see this ending in a smoother transition than worst case scenarios, and we see the pound in position to benefit most if risk starts to come off and U.S. equities falter. That breakout in gold is something we think is worth paying attention to as it follows a massive consolidation. Higher gold reflects uneasiness in markets and we believe could be a warning that a downturn in stocks is around the corner. Ultimately, the major currencies should outperform in such a backdrop, and because of the knocks against the buck that we've mentioned, we could see the dollar outperforming against risk correlated FX, but underperforming against the other majors. As far as today goes, key standouts on the calendar come in the form of UK CBI reads, Canada wholesale sales, US Case-Shiller, US consumer confidence, US new home sales, the Richmond Fed manufacturing index, and a speech from Fed Powell. That's all for now.